Welcome to July's mortgage update. This is Dylan Langei, branch manager and home loan officer at Evergreen Home Loans. But as you guys know, my brand is Whatcom Home Loans. It's my website, whatcomhomeloans.com. If you ever want to go back and see different loan products, different mortgage updates, please do not hesitate to go to whatcomhomeloans.com. You'll see on my website here, it's got a bunch of great information under the resources tab. You can find all of the mortgage updates by month. It talks through different products like our new HELOC product, some of our different brokered products and different topics I've talked about month over month. And then the videos has some individual loan products, our blended rate calculator that can talk about debt consolidation, really show you the visual picture of that. So don't hesitate to reach out if you have any questions on any of those. It's where you can get get some pricing on what you're looking for. You can apply on this website, all the good stuff. But let's jump into it. So real exciting stuff. So this is the June mortgage update. Hope everyone had a great 4th of July, kept all their fingers and toes. My family and I, we went to Lake Whatcom, and it was quite the show watching it from my parents' house. They live out there. So it was awesome. Cruz, our son, was very fearless, but our dog, of course, was freaking out. But I've got some cool news. So this hit my desk about a week ago. We now have opened our construction financing to multi-unit properties. Never in my lending career have I had a loan product for multi-unit properties. Typically, I've only had products for single-family, primary, or second homes. We've now opened this up under conventional financing for 1 to 4 unit properties, depending on the occupancy, down payment, all those sorts of things. I know everyone's going to get excited and want to build their own fourplex and inundate me with calls. Owner builder is still a tricky one. If it's on an exception basis that we can do that. If you've worked with Evergreen Home Loans, just contact me if you are a builder or you want to build your own home. And I can kind of send you some of those requirements, but let's jump into it. So this is my actual newsletter that goes out. So if you're seeing this from social media or something, reach out to me. I can put you on this newsletter, but let's zoom in here. So here are the loan to value, which in essence gives you the down payment requirement. So you can see on Fannie Mae, so we can do a 1 unit construction loan with 10% down, a duplex with 10% down, or a 3 to 4 unit with 10% down as a primary. Okay, if it's a high balance, that's over the conforming loan limits, which once again, you can go back to my handy dandy website here. If you're like, what are the loan limits? Go to resources, loan limits, Whatcom County. So if it's over these loan limits, that's high balance. You have to be in a high cost area. This loan product is not jumbo, so it's only for these. So you have to borrow less than $981,500 if you want to build a duplex. $766,550 if you're building a single family home. Okay, so that's for primary. Second homes, we can only do 1 unit. There's not a duplex second home. That doesn't make sense. But investment properties, we can now do a duplex with 30% down on the loan to cost value or loan to value. Freddie Mac has a little bit of tighter guidelines with the down payments. But this is really exciting stuff. I mean, if you're buying an owner-occupied 4-unit property, you can technically do 10% down loan to value. So 10% down on the acquisition cost, which that is, the land, your materials costs, your hard costs, your permit costs, all the soft costs, everything on that, you need to do 10% down of that value. Now, there's many guidelines with this product. So, I know it's very exciting news. I'm personally building a primary residence right now with my wife, and I think it's important to talk about the numbers, okay? I'm building in the city of Linden. When you talk about, I think when people think it's a very low inventory market, so they think, I'm just going to build what I want, or I'm going to build a fourplex and make a ton of money. Building costs are very high. There's a lot of energy codes that have come out in many municipalities that's making the cost of building very, very tough. I've seen a range from $250 to $450 a square foot, so you can do the math there. Whatever the square footage of a duplex, fourplex, they still have a foundation, a roof. There's 2 kitchens or 4 kitchens, right? There's still flooring and sheetrock and right all the material costs. It's still very very pricey. Permit costs. We paid, I want to say, $23,000 for our single family permit in Linden. This was utility ready though. We didn't need a septic or a well. It was $23,000. If you build in the county, the permit costs are a little bit less, a few $1,000s, but you have septic costs, all the utility costs that you don't have in the city. City of Bellingham, single family home, I want to say the last construction loan I did was between $30,000 and $35,000. So those are part of your soft costs. It is quite expensive to build, but it's exciting that we're able to do these construction loans on multi-unit properties now. So those are the realities. If you want hard numbers or questions about any of that, once again, I'm personally going through the building process, which is great because I have firsthand knowledge of this process. Now let's talk about rates, turn times, appraisal turn times, all the good stuff. So let's look at, there's always a direct correlation between mortgage applications and mortgage rates. So if we look in the last month in June, right, 15.6% pop in mortgage applications nationwide week 1, then 0.9, 0.9, and then it went down 2.6. Well, let's look at mortgage rates. So mortgage rates right now are sitting at average 30-year fixed is 6.95. This is on Freddie Mac's website. So if we look at the beginning of June or end of May, we're about 7%. Went down, down, down. Once again, mortgage applications up, up, up. And then we have this little bump in the last week. So we're about 6.95. What did mortgage applications do? They went down. Well, what I have to say, if you're a buyer, the less mortgage applications, that means the less buyer demand, which means you could potentially get a better deal. If you look at my newsletter, I've got multiple clients that got seller credits, upwards of $20,000, $25,000 through negotiations, inspection negotiations that they use to buy down their interest rate, fix things on the property. There's a lot of wiggle room for buyers right now. Also, we're in a low inventory market. So if you're a seller, a lot of buyers are looking for move-in ready. If your house has issues, has big ticket items that have problems, that may sit a little bit longer than the property that is dialed in, ready to go. Location, price, and features. I always say those are the 3 things that buyers are looking for in a low inventory market. Hopefully they can get one of those. And I think right now, features really matter. Everyone knows prices are quite high. It's all relative. And location, that depends on the person. But features, people really want a pretty dialed in property. So that's what mortgage applications and mortgage rates are doing. You can see just an example here on a $700,000 purchase, 10% down. What a low 6s rate would be. Principal and interest is $39.30 a month. Then you'd have taxes, insurance, mortgage insurance, and you're paying 2.5 points for that rate. If you didn't want to buy down the rate as much, then you're probably in the high 6s, like the 30-year average showed. So mortgage rate trend is down. A lot of economic news coming out this week specifically, which if we pop over to my friends at Mortgage Market Guide, we can see this is bond pricing. Green is good. That means mortgage rates are going down. Red is bad. So you can see how volatile this rate environment has been. Day to day, week to week, very, very volatile. And then we have a lot of economic news that is coming out. This is last week. So let me go here. So CPI is Consumer Price Index. That's the Feds. They love that gauge of inflation. It's what me and you pay at the grocery store, gas pump, right, for consumer goods. That's coming out on Thursday. If it comes in below expectations, we could see mortgage rates go down. If it comes in at or above, right, they could go up. That's just where we're at right now. And then core PPI, so core producer price index, is coming out Friday, as well as consumer sentiment. Consumer sentiment is how does consumers feel about the economy. So some big numbers coming out this week. You're seeing this, in real time right now. It's July 8th. These rates could flip on a dime. The best advice I can give you if you're looking for a property, get pre-approved. Better yet, get pre-underwritten. Takes about a week. Get through with our Security Plus approval. I think that there's a lot of opportunity as buyers right now. I've heard a lot that, hey, I'm going to wait for rates to drop. The minute that rates drop, or the Fed potentially drops rates in September, which is what a lot of economists are saying and speculating on, it's just, what's that going to do? Supply is probably going to stay pretty stagnant, but demand is going to go up, which is going to drive prices up. So if you're in a position where you can buy now, or you or your family needs a new home for whatever reason, my suggestion would be take the step, take a look at some properties, get pre-underwritten, see what that's going to cost, budget. Just call me, right? I talk through so many scenarios every single day with clients that think that it's not possible or not doable. We've looked at debt consolidation. We've looked at selling their house, paying off some high interest rate debt. Suddenly their cash flow is exactly where it was at or even lower, even with a bigger mortgage payment. So I'm always a resource for you. If you ever need anything, reach out. If you have any questions about building a multi-unit property, reach out as well. Really, really excited that we just launched that last week. And we'll catch you next month. See ya.